At the start of 2024, one of the hottest stocks in the stock market was Super Microcomputer. From January through March, the stock ran up over 300%. However, from these all-time highs, the stock has now fallen almost 80%. And now in the week leading up to their next earnings announcement, the stock has fallen 45%. So in today's video, we're going to take a look at that earnings announcement and talk about why it does not matter at all because of all these other things that are going on with this company right now. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Leading into an announcement on Wednesday, October 30th, the stock was trading around $50 per share. However, after they came through with this announcement, the stock traded down 30% in a matter of less than an hour. And over the course of the next couple of days, the stock continued to trade down by another 25%. And this large sell-off in the stock price is after the company announced that they had lost their second auditor in less than 2 years. On Wednesday, Super Microcomputer announced that Ernst & Young had resigned as their accounting firm just 17 months after taking over from Deloitte. Ernst & Young released a statement saying they were unwilling to be associated with the financial statements prepared by management. And a spokesperson from Super Microcomputer replied by saying they disagree with Ernst & Young's decision to resign and that they're working diligently to select new auditors. And obviously, this is very concerning for investors because now 2 of the big 4 accounting firms have actually left Super Microcomputer, and likely Deloitte probably left for similar reasons. If Super Microcomputer is putting pressure on these accounting firms to misreport numbers, that is very concerning, not only for these companies, but also for investors and especially the SEC. And obviously, Super Microcomputer is going to push back. They said that they do not expect matters raised by Ernst & Young to result in restatements of their financial quarters and their fiscal year ending in June of 2024. But we're already seeing these concerns get elevated to the highest degree. The Department of Justice is now stepping in to investigate the departure of their accounting firm. One analyst at Argus Research actually believes that Ernst & Young is leaving not only because of accounting irregularities, but because the company is doing business with some problematic entities. We've seen the US actually restrict what types of chips can be sent to China and Russia, and that's exactly where Super Microcomputer comes in. They create these servers that use NVIDIA chips, and there's a belief that Super Microcomputer could actually be sending some of their items to companies within Russia. And obviously, this is a huge concern. If Super Microcomputer is turning around and selling advanced AI chips to companies within China and Russia, that would be a huge no-no in the eyes of the government, which could ultimately lead to Super Microcomputer being hit with severe fines or even potentially being delisted. And this concern of potential delisting has been compounded by the fact that Super Microcomputer has not filed with the SEC since May. And they've even been given notice by the NASDAQ that they have 60 days to file or at least submit a plan to regain compliance, and ultimately this actually comes due sometime in mid-November. And honestly, these recent events shine light on some previous announcements from the company, because in March of this year, they announced that they were going to be raising $2 billion in equity sale. This is already bad for investors because it dilutes them by selling more shares. However, this gets even worse as some of these concerns around audits come up, because ultimately, why did the company need to raise money if they were doing so well, or at least as well as they were saying in their earnings reports? And ultimately, all of this is why their upcoming earnings announcement on November 5th really does not matter, because it's hard to really trust a company that has gone through all this turmoil in the last year. If you do care to know, analysts right now are expecting EPS to come in at 73 cents and revenue to come in at $6.44 billion. But can you really trust a company when they've lost 2 accounting firms in the last 2 years? Right now, their revenue has obviously increased significantly in the last couple of years. Is that due to the company actually performing well? Are they actually not performing as well as they're saying? Or potentially, are they selling chips illegally overseas? And that's where all of this business is coming from. Back in March, the company announced EPS growth of 340% year over year, putting up EPS for the quarter of 66 cents and trailing 12-month EPS of $1.79. Why would a company that is growing at 300% need to raise $2 billion from investors? And these concerns around the company bring everything into question, because their trailing PE ratio is currently sitting at 13 and their forward PE ratio is sitting under 8. These these look like outstanding valuations, but the question has to be asked if these are actually real. These valuation metrics are based on previous earnings announcements as well as projections of future earnings announcements. Right now, they have an average EPS estimate for 2026 of $4.32, a low of $4.01, and a high of $5. However, these estimates are based off looking at their numbers and their growth over time. If that is not accurate, it's hard to tell exactly where the valuation is at on this company. And ultimately, that is why Super Microcomputer has fallen almost 80% in the last 8 months. Ultimately, if you think that the company is going to get cleared from all of these charges or potential charges, then maybe now is a good time to buy, because they did establish a range of around $80 to $100 per share, and that would be about triple the price of where the stock is currently trading at. But for me, I don't have a lot of confidence that that is going to happen. A lot of these auditing firms, they want to stay on top, especially these big four firms, so they're not going to associate with any company that has anything going on that's sketchy. So for me, I'm staying away from this company for now. Potentially in the future, I'll relook at it, but there are too many things going on with Super Microcomputer. But let me know your thoughts down in the comments section. Remember, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for all the No Shave November fans, the joke of the day is, what do you call it when a cow grows facial hair? Check the comments down below for the answer. Thanks for watching.